Right, guys. So I did manage to sit down with Rick, but unfortunately, there are some video quality issues that you will notice in this one. There's frame skipping and audio stuttering, which I am really, really apologetic about. I'm so sorry that happened because it was a truly phenomenal video. And I thought it would be a massive disservice to you guys if I don't upload it because Rick was phenomenal. He delivered a wealth of information in the hour I sat down with him. The technical issues were from my end. Something went wrong with the screen recording. So while my audio will be fine because I use my phone as the camera, his wouldn't be very clear because that was the screen recording version. So please do forgive the audio quality. I'm so sorry about it. But do your best to look past it, please, and try to take on as much information as Rick delivered as possible. And here's the interview with Rick Wu. What's good, Kanekis? Welcome back to the channel. I hope you're all doing well. I am joined today with Rick Rule, the CEO and president of Rule Investment Media. He is very active in retirement. He has decided to start up a bank called Battle Bank, which we'll hear about later on. And he's also running a Rule Symposium, which I have mentioned in the previous videos, and I'll give him a chance to talk about it to really sell the idea on why it's important to sign up to the live stream if you can't make it. And also to, Rick, correct me if I'm wrong, is it possible to sign up for the in-person events right now?
I'm sorry?
Is it possible to sign up for the in-person events? Is that still available?
Kojo, I will take your money. It is absolutely fine. I will live stream right now.
There we go. So I will give him the opportunity to sell you the idea. As you can tell, he's quite the character. He's quite funny. So let's get going. But Rick, thank you very much for joining me today.
Pleasure. It's an honor. Thank you for having me on.
Bro. All right. So first things first. I mean, I mentioned in our pre-chat that the audience is quite vast. Some people who are just starting their investment journey to those who are quite astute with what to do with their finances. So the first question I'd like to sort of introduce everyone to this topic is what are the common misbeliefs that people have when it comes to investment? So things from pensions to investing in treasuries. What are the things that people are told that are just not so in reality?
It's taken me a long time to learn this, man. But
Mm-hmm.
the biggest investment risk you face,
Mm-hmm.
the left of your right ear and to the right of your left ear. It's not Trump. It's not Parliament. It's not interest rates. It's the fact that you're going to be dealt the cards you're going to be dealt with. And whether you do well in life depends on how you play those cards. That's the biggest thing. Your biggest risk is you. And if you address those risks, the other risks become manageable. A second risk, I think, is that many people adopt the right strategies. They think that maybe the economy will get softer over 5 years, or they think the copper price is going to go up, or they think that some technology is going to come to predominate. But they confuse their strategy with their tactics, and they think that their time preference matters. Any number of people I've talked to, thousands, literally thousands,
Mm-hmm.
have described for me strategies that over 5 or 6 or 7 years would be accurate, but they have trauma holding stock over a long weekend. And one thing I've learned in 72 years on Earth, 50 of them as an investor, is that most of the money that you make in investing is a consequence of compounding.
Mm.
So despite the fact that you, particularly as a young man, are impatient,
Don't speak for me, Rick. Don't speak for me.
listen, if I start asking you the questions, I bet I prove myself. I remember myself, it was real
Mhm.
odd when I was in my 20s and I had all the time in the world left to me. I was very impatient.
Mm.
Now that I'm an old man and time is drawing nigh, I've become much more patient. It isn't because I have more time. It's just because I've learned that time is what's required to make money.
Mm.
Uh,
Mm.
uh, an inconvenient truth, so to speak.
So when it comes to the time element, we see lots of people day trading now with Bitcoin, with I mean some people are even trading the stock market, the S&P 500, which is really something that Buffett has said it's the time in the market that beats time in the market, but people still trade it. So do you have any advice in terms of the assets people should look to if they're trying to think long term instead of just, doing trading every day?
If trading is going to be a profession,
Mhm.
which is to say you're going to focus on being a trader, you're going to do that for 10 hours a day. And you're better at being a trader than you are an accountant or a janitor or whatever else it is that you do with your time. That's okay. It's not the same as investing. It's a job,
Mhm.
uh, perfectly honorable job. I've known some people who are good at it. I don't happen to be one because it doesn't interest me. I would rather spend my time doing old-fashioned securities and credit analysis than hiking, spending time with my wife, stuff like that. But
Mhm.
if you prefer to trade than to study, and if you spend 10 years developing your skills, like you have to spend 10 years developing any other skills that ever going to make you money, by all means, be a trader. I'm not one, but it's a lucrative, if very demanding profession.
It is. It is. The next thing I want to talk about is pensions, Rick. So I'm a young man. I already know that I'm not getting my pensions, but I've been trying to explain it to people that the math around the pensions doesn't make sense. So I'd like you to talk about it because you have the numbers, you know everything about this. So please educate the audience for me.
Well, you're unusually uh, insightful for a young man
Thank you. Thank you.
because the education that you've been exposed to, both the formal education and the informal education you get from government and the mainstream media, tells you something very different.
Yeah.
And you've been able to pay attention to the math, the narrative.
Hmm.
So let's get into that. Let's understand, first of all, about the politics of pensions. Uh, Elections, and this pains me to say it, they're really truly advanced auctions of stolen property. People try to vote benefits for themselves, and they try to protect themselves from the demands of others.
Hmm.
Now, who do you think they penalize? They penalize young folks and the unborn.
Hmm.
Well, we have $30 trillion in net debt. To put that in perspective, that's 120% of GDP. But it gets much worse than that, as you alluded to. According to the Congressional Budget Office, not some fat, bald old libertarian, Rick Rule, according to the Congressional Budget Office, the net present value of our unfunded liabilities, the stuff that I paid myself and I'm giving you the bill for, is $100 trillion. $100 trillion. That's 100 with 12 more zeros before the decimal point, just to put it in perspective. But it gets worse, Kojo. Every year, the on balance sheet liabilities, that's what we bondholders, grows by $2 trillion a year. And every year, the off balance sheet obligations, the net present value of our entitlement liabilities, grows by between and $3 trillion a year. In perspective, gross federal revenues, that's all the money that the federal government takes in, all of it, before they spend a dime,
Hmm.
that's $5 trillion. So the on-balance sheet liabilities and the off-balance sheet liabilities grow between 4 and 4.5 trillion a year, and we only take in $5 trillion a year. Now, how do you reckon this is going to work out? So, on one side of the aisle, the big thinkers say, well, we're going to tax the billionaires. That's what we're going to do. We're going to increase the taxes on the billionaires. And again, math gets in the way.
Hmm.
According to the IRS, it's their business to know, billionaires control $6.7 trillion worth of wealth. So if rather than increase their taxes, you just stole all their money, right? All of it. You solve the deficit, not the debt. You solve the deficit for a year and a half. And then you killed the goose that lays the golden egg. So what's part of the problem? Uh, part of the problem.
Pause, by the way.
A little poem my grandfather taught me, which I'd like to recite for your audience. Goes
Sure.
like this. When your outgo exceeds your income, your upkeep becomes your downfall.
Downfall. Yeah, yeah.
I wish I could read that to Congress. But anyway, so that's one problem. Meaning, there is no way at all that we're going to be able to honor our entitlement liabilities. There is no arithmetic way on earth. The According to the IRS, the net present value of all Americans, not just the billionaires, all Americans, private net worth is
Mhm.
141 trillion. And our on and off balance sheet liabilities at the federal level before state and local debt is 130 trillion net. There's 11 trillion left over, and the
Oh, that's
deficit
too
grows
much.
by $4 trillion a year. So, regardless of your right or left or black or white, or young or old, the arithmetic is all the same. You can't add a column with negative numbers and positive signs.
Hmm.
Okay,
So, Rick,
doesn't
this
work.
is the hook, line, and sinker. How do they fill the gap? Because they're
They
going to
don't have.
have to.
Here's
How?
what's going to happen. I mean, they're going to do two things.
Hmm.
They're going to go and fool around with entitlements a bit. They're going to tell some old rich guy like me, you know, uh, your Social Security obligations aren't going to end at $160,000. We're going to tax you on all your income.
Hmm.
And then you're not going to get any benefits because we're going to means test benefits. So we're going to steal your income, but we're not going to give you the benefits because you don't need it. And they're going to raise the entitlement age, which they should. When Social Security was enacted, it provided for basically poverty level maintenance. At age 65, the average life expectancy of an American male was 66 years. So they promised to give you a little bit for a year, but that's all changed now. And, they're going to have to mess with all this. But messing with it doesn't matter. The number's too big. So here's what they have to do. We don't have the political will to be honest and have a default.
Yeah.
One thing we could do if we were Argentina is we could be honest. We could call up all our creditors and say, you know what, we lied. Strong letter to follow. Didn't get any money. But we could tell old folks like me, yeah, you paid him for 60 years. So what? There's no go. You're out. That's not what we're going to do. That's politically unpalatable. Old guys like me vote, give campaign contributions, stuff like that.
Mm.
But what we're going to do is we're going to have a dishonest default. We did this once before, the decade of the 1970s. You weren't around.
No.
In the 1960s, we fought the war on poverty, which we lost. We fought the war in Vietnam, which we lost. And
Hmm.
what we had left over was a bunch of debt. We couldn't raise our taxes because the marginal tax rate was already 80%. So
Um,
what we did, according to the Office of Management and Budget, is that we allowed the real purchasing power of the US dollar to decline by 75% in 10 years. Taxes weren't indexed to inflation. Benefits were indexed to a lower rate of inflation that actually occurred.
mm.
And we allowed or forced the purchasing power of the US dollar to decline by 75%, which meant de facto that while we honored our nominal obligations, we reduced our real obligations by 75%. And that's exactly what we're going to do this time. You're going to take that $150 trillion. You're going to honor the nominal obligation. An old fat guy like me that's been promised 4,000 a month or whatever it is we've been promised. I've been promised. I'm going to get it. But that $4,000 a month is going to buy me $1,000 worth of goods and services after 10 years. I believe that there's no way out without allowing the real purchasing power of the US dollar to decline by 75%. I don't mean 75% relative to the renminbi or the euro or Canadian dollar. I mean in an absolute sense. I think other currencies will do at least as bad.
Yeah. Yeah.
What it means is that if you think that you're going to get, let's say you think you're going to get between public and private a $5,000 a month pension or a $6,000 a month pension, you're likely to get it. The problem is it isn't going to buy you much. It's going to buy you a quarter as much as what you have right now. So you have to plan for that. You have to understand that I spent your future.
Mm.
And you have to understand that I'm not going to give it back to you. So I'm not trying to personalize this. You understand?
Yeah, I get you. I get you. I understand.
So you're going to have to provide for it, and you're going to have to make real sure that I don't steal anymore. Uh, Real sure. There's a bunch of folks my generation that didn't prepare as well as I did. They believe that they're
Mm.
into what they've promised themselves as voters over 50 years. They don't understand that if they made the promises, they got to keep them. They reckon they made the promises, and you got to keep them. And you got to be on guard for that.
Yeah.
You got to be on
And
guard for that. Here's a couple of things. Most folks, especially folks your age, no, that's not true. All folks,
mhm.
when they think about inflation, the number that forms their opinion is the CPI, the government
Yeah.
number. If you believe that, you're in pretty good shape. Uh, Here's a problem with the CPI. I like to call it the CP lie. First of all, the CPI doesn't measure tax.
Mm.
Now, I guess if I didn't have to pay the tax, I wouldn't get quite so much about the index. But it turns out that taxes are the largest component of most household budgets. So cost of living that doesn't include tax is kind of questionable.
Yeah.
Look at your own budget in 2020 or something, the last 5 years maybe. Do you believe that your health care or health insurance costs are up 2.5% compounded? Do you believe that gasoline prices have only risen by 2.5%, or other energy costs, or home interest rates, which doubled, or
Rent.
rent? This is
Yeah.
insane. This is truly insane. I believe that the purchasing power of the basket of goods and services that I consume has been increasing by 7.5 or 8% a year, not 2.5. And here's the real rub. If you're trying to be prudent, if you're a saver, right, you're trying to prepare for your own retirement. If you believe that inflation is going at 2.5 and you buy the U.S. 10-year Treasury at 4.5, you're doing okay. You're making 200 basis points, 2% real yield above inflation. But if you find that you're getting paid 4.5 in a currency where your purchasing power is declining by 7.5, that means you're losing 3% a year. If you put your money,
Guaranteed.
yeah, if you put your money in the so-called world's best savings, the U.S. 10-year Treasury, means
Mhm.
you loan the U.S. government money for 10 years and they make you 3% poorer a year, compounded every year for 10 years. They give you back about 60% of your purchasing power at the end of the 10 years. That's a hell of a deal.
Yes.
So I hope I've made you sick enough around.
Well, not me personally, but I'm sure a lot of people because I've watched a lot of your interviews, so I'm familiar with these numbers. But I mean, still hearing them again is mind-boggling. It's mind-boggling that we've allowed this to happen. And actually, speaking to the everyday person, colleagues at work as well, when I interact with them, they and I try to educate them on these things. They say that the thing we need is more government. So they have the completely opposite view to a libertarian, where they say, yeah, we need more government. Government needs like people need to contribute more. The corporations, the private people are the greedy ones. They're the ones who we need to tax the rich. What do you say to these people? How do we let them know that actually government is the one who's strangling the economy? They're the reason unemployment is currently increasing and
I
so
sort of
on.
say to people, so you have the flu,
Uh
and what you prefer is to die of AIDS.
huh. That's a new one. Okay, now that's
I mean, for sure, the flu will kill you. You know,
oh, oh! I told you he's a character.
it,
Hmm.
it, uh, it usually doesn't make them laugh quite as much as it made you laugh, to be honest with you. But
No,
it gives me some
no.
satisfaction saying, what I try to do is, personally, truly, I try to find areas of agreement with them, and I try to say, the manipulation by the rich people is unconscionable. And we need to remove all subsidies. We shouldn't allow rich folks to steal. And change the nature of politics so that stealing is less possible. Once I get them to agree with that, then I say, the order of magnitude of this is truly stunning. Did you know that our government is $36 trillion in debt? Did you know that the debt is now 120% of GDP? Did you know that in 1981, it was only 30% of GDP? It reminds me of the old Hemingway quote I tell people, because they say, we've gone on like this for years, and my life hasn't changed. When they asked Hemingway how he went broke with all that money he made writing books, he said, slowly at first, all of a sudden. And I can find areas of agreement with people, and I then introduce the math. And I say to a young, smart guy like you, how would you propose to fix this? And then I sit back, and whatever proposal they give me, I try to take them through the arithmetic. I say, that's a really good idea. I really like that idea. Here's how far it goes. Remember that the on-balance sheet and off-balance sheet liabilities increased by $4.5 trillion. Remember the gross federal income is $5 trillion. And remember that somehow there has to be money left over to service $130 trillion in debt. What you've talked about makes some sense on the face of it, but it doesn't address the problem.
I like that. And all this while, by the way, the debt is accruing interest and it's compounding. So if you like you said earlier, taking advantage of the compounding effect of wealth, debt also has the opposite effect, but in the negative. So each year that keeps going.
I'm not supposed to say this, but people watching you and me, this isn't a black issue or a white issue.
No,
this is math. We truly are all in this together.
I completely agree.
Young math, old math, left, right math, left math, it's all the same. It's all the same. Our preferences could differ. That's good. That's what makes a market. But the math doesn't change.
So let's give people some hope, right? The people watching now, firstly, you're doing very well for watching this interview. What can they do to protect themselves from this impossible math? How can they protect themselves, their family, their friends? What can they invest in? What can they buy?
This is how I get folks to listen to me. I make them sick before I make them well.
I like it.
Through the decade of the 70s, and we got through it. There were some challenges, to be sure, but we got through it. Humankind, but in particular the United States, is a place, it's a circumstance where our individual creativity and tenacity generates a ton of wealth. It's a place where 5 or 6 kids can commandeer a garage in Sunnyvale, California, and out pops Google or out pops Apple. Creating billions of dollars of wealth, but creating trillions of dollars of utility. That's how the wealth gets created. Over time, our individual creativity and tenacity can fund our collective stupidity. In the decade of the 70s, there was a reckoning, but a couple things happened. There was a consensus that we had to reduce the size of government. Reagan got elected. He didn't reduce the size of government, actually, but we constrained its growth. Midway, all the way through the first term of the Clinton presidency, for 12 years, we reduced the rate of government growth at the same time that the economy was growing. And we got a second chance. Now, it was ugly getting through it. The interest rate in the decade of the 70s tripled. at the same rate that the purchasing power of the U.S. dollar declined by 75%. I'm not trying to say it wasn't hard on a lot of folks,
Yeah. Yeah.
but we did it. There are certain things you can do, uh, but what you can't do is nothing. You can't, first of all, go in the corner in fetal position and curl up like a little baby and cry. That means that life is going to happen, and
Yeah.
that's not going to be pretty. And you can't count on the government to solve your problems. It might be that you think they should. It might be that they promise that they will. None of that matters. You got to do it yourself. And there's a whole bunch of ways to do that. Decade of the 1970s, in fact, bracketing it, period 1968 to 1982, we had a 14-year equities market. 14 years.
S&P 500, Nasdaq, by the way, to those who aren't aware.
We've got a down quarter now. We had 14 years. And yet, Warren Buffett, thinking differently than the rest of the world, buying different kinds of companies, generated 22, 23, 24% compound annual rates of return. A market that went sideways to down, and this guy generated 20% plus compound internal rates of return. He did it thinking differently. In the decade of the 60s, the big thing were the Nifty 50, the big growth companies and stuff. He decided they were horrifically overpriced and looked for mundane businesses that were selling at 6 times earnings at 60% of book and had 6% dividends. He called it the sixes. And by applying normal common sense to valuation in a market that was sideways to down, he was up between 20 and 25% a year. The other thing that worked in the decade of the 70s was natural resources and precious metals. I don't want to oversell this because when people hear the gold narrative, they tend to go all in. They tend to go too far.
I'm guilty.
In the decade of the 70s, when the purchasing power of the U.S. dollar declined by 75%, the gold price increased 30-fold. 30-fold. Buying a little bit of gold in 1970 saved you from a whole bunch of sin the next 10 years. A little bit of insurance went a very long way. And the gold stocks did twice as well. People need to understand that. Things that benefit from inflation. Some forms of intelligently financed real estate, where new competing real estate is more difficult every year because the ability to finance and the cost to construct it goes up. I say intelligently financed because you better not have a variable rate mortgage for the next 10 years.
Oh, yeah.
Going up. So you got to get 30-year fixed. Despite the fact that you pay more now, you got to do that. Other capital-intensive businesses tend to do very well during periods of inflation because the cost to replicate the productive capital has been put in place gets a lot more expensive every year, and there's usually financing challenges too. The natural resource complex, I suspect, beginning 2 years from now will do well. I think in the next two years, we're likely to have a softer economy than people believe. And you can have declining supplies of natural resources if you have declining demand. The price doesn't move. But looking in the out years, there's no doubt in my mind that we've had 30 years of underinvestment in natural resources capacity. And the cost to replicate this capacity is going to go up.
Yeah.
So there'll be some challenges there. So you can do that. But the most important thing is to do what most people don't do, which is to invest in yourself. To understand that your ability to make money is contingent on your ability to deliver value for somebody else. That's all it is. Your employer doesn't pay you to show up. Your customer doesn't pay you to show up. They pay you because you are providing a good or a service to them that they value more than the money that they have to pay you to get it. That's what it's all about. You don't have to be an entrepreneur to do this. You can be an employee to do it. You can do it anyway. But wealth is the difference between the value that you create for other people and the value that you consume for that you consume. The delta between those two should be savings.
I like that.
And you save the surplus utility that you create over what you consume. And if you invest it intelligently, you don't have to worry about the government providing for you. Now, I don't know what it is you do for a living, but I bet you know that there's a certain class of people you who do what you do,
Hmm.
and that the group of people who do it diligently and thoughtfully do it better than the rest of them.
Yeah.
In other words, you are a group of people out competing other people. And while that may not make a difference for a month or 3 months or 12 months, it will make a difference over time. You will be rewarded for your performance, and your reputation, your brand will increase in value.
Hmm.
I get to make a lot of money now just by being recruitable. I make a lot of money because I spent 50 years gaining knowledge and gaining reputation. And uh, I'm not alone in this. There are people who attract customers not merely because of their knowledge, but because of their reputation. Once they've
Hmm.
attracted the customer because of their reputation, their knowledge allows them to create value for the customer, value in excess of the cost to create it. And that's
Hmm.
wealth. That's true wealth.
I really like. I haven't heard it put that way before. So that's really interesting. Just so I can clarify for the audience, when you say natural resources, what commodities exactly are you referring to?
Well, most of my expertise is around mineral commodities, but
Okay.
I would certainly include high quality farmland, very high quality farmland, not marginal stuff, and high quality timberland. But there's I mean, we've recently seen an increase in the oil and gas price because of the conflict in the Middle East.
Yeah. Yeah.
It was costing around $60 a barrel. That's not going to work.
No.
You need a much higher oil price. The big thinkers in the world, what's that energy physicist's name? Greta Thunberg, I guess. Greta will tell you that the world's going to graduate from fossil fuels in 2030.
Hmm.
Uh, we will probably reach peak oil demand in 2065.
Yeah.
2030. That means that the world is mispricing the oil and gas business. They're acting like the half-life of the net value 2030 when it's 2065. So those companies are selling for half what they're worth.
Hmm.
I mean, they bridge the gap immediately. But if you buy something for half of what it's worth and then hang on for dear life, you're going to do well over time. In the copper business, we've been underinvesting in for 30 years. And that means that we will not be able to produce enough to keep up with demand in 5 short years. Part of it is what you and I think about the demand that we have. Data
Hmm.
center, your headphone,
Yeah.
like that. And that's going to increase. So they'll say that electricity demand for technology applications will triple by 2050. The demand that people don't see is the fact that there's a billion people on Earth no access to private electricity. We've done a great job in the last 40 years. The poorest of the poor. 2 billion people worldwide from abject poverty being poor. I'm not
Yeah.
trying to say more to do. We're going to finish the job in the next 20 or 25 years. On all the money. What you saw in China and Deng Xiaoping said to be rich is glorious.
Hmm.
It took 550 million people out of abject rural penury and brought them to the lower middle class. We're going to do that around the rest of the world. It's going to take a lot of electricity,
Yeah.
and that's going to take a lot. We're going to have to build these power plants, lines to distribute the power, and then you're going to have to fabricate houses to accept the power, and then you're going to buy all the goodies that come with that power. And the marginal user matters too. In India, the country is 94% electric. But only 6% of Indians have access to air conditioning.
Mm.
I mean, this is a place. Uh, and all of these uses are going to mean we're going to need more copper, and we're going to need more distributed power, which is a fancy way of saying batteries. So we're going to need more nickel, more lithium. We're going to need to generate that power. The big thing, Greta, Angela Merkel, and all those morons, that's what they want in solar.
Yeah, yeah.
And that'll help. That'll help. We need all kind of power. But your audience can ponder this fact. In the last 40 years, 45 years, $5 trillion on alternative energies. That's a big number. I put these keys around like they're nothing.
Yeah.
We've used market share of fossil fuels with this $5 trillion investment from a high of 83% 45 years ago, all
Mhm.
the way up to 81.
Crazy.
Market share. Given we have 1 billion people on Earth to extend power to, do you actually think that wind and solar is going to make an arithmetic difference to the equation? Not. We're going to need nuclear, we're going to need oil and gas, we're going to need hydro, we're going to need geothermal. And yes, the big thinkers hate to admit it, we're going to need coal.
Yeah, yeah, yeah. I mean, we've seen very recently Portugal and Spain. They had power outage because they went 100% electric, and this. I mean, so I studied aerospace engineering in uni, and we had a course on renewable energy, and we were taught that renewables have like they go through phases, so you need a capacitor to
Correct.
store the charge, and that's supposed to be provided by the lithium batteries, coal, like you said, maybe nuclear, oil. And so being able to have 100% renewable, which Greta wants for the UK and for the whole of the world by 2030, is not feasible. It's simply not feasible.
Did they teach you at university around solar energy how you deal with night when the sun doesn't shine? I remember listening to Angela Merkel, who was
Mhm.
the prime minister of Germany for a very long time, and she was talking about solar. But and
Uh-huh.
I'm not an engineer. You probably got that. You figured that out already. But I'm thinking, how is solar going to work far north with time? This just a lot. Never mind that. Then they say batteries. Well, what's the market for distributed storage on a base load
Yeah.
level? It's insane.
Yeah.
I mean, it's truly insane. These big thinkers are really good narrative, and they're really bad math.
Yeah. So, Rick, send us home. I'd like to give you time to promote your symposium coming up, and as well as Battle Bank. I'll ask about Battle Bank afterwards because I do have a question I want to bring up. But first, let's hear about the Wool Symposium. Sell the audience on the idea.
Well, I've been selling you for an hour on the idea that you educate yourself.
Yeah, you
This is
have.
an
You have.
opportunity. This is an
Mhm.
opportunity to do just that. We've been putting on the conference for about 30 years. I actually don't remember how many. But we made it a little bit better every year, and if you make something a little bit better every year for 30 years, it gets pretty good.
Mm.
I suspect that this is the best of breed, the best that you can get. Here's why. We start with the real big picture, the global macro. But our commentators aren't influencers or journalists. They're people who inhabited the institutions that they're talking about. In a biblical sense, they're speaking from the belly of the beast,
Mm.
not observing the beast from afar. So, as an example, I have David Stockman talking about what I consider to be the biggest political issue in the world today, which is the U.S. government deficit. How does he know? Well, he ran the Office of Management and Budget in the Reagan administration.
Oh,
The
okay.
first time that we had a real mandate to reduce the size of government. And he literally wrote the book called The Triumph of Politics about how Republican and Democratic congressmen derailed the Reagan Revolution within 6 months of the inauguration. And his comments, if you followed them on X about the fraud around the Department of Government Efficiency, have
Yeah.
been spot on. Spot on. What's important is not that he's an observer, but rather that he's been a player. We moved from him to Daniela DiMartino Booth talking about the Fed. She's not a failed journalist from a leftist school. She was a researcher at the Fed. Again, she's got a belly of the beast. Naomi Prins talks about the corrupt nature of Wall Street.
Hmm.
Who's a partner at Goldman Sachs? Jim Rickards talks about the intersection of Wall Street and Main Street. He was general counsel at Long-Term Capital Management when their failure almost brought down Wall Street. And he was the first architect of the federal bailout of Long-Term Capital Management, which was actually a bailout of Wall Street.
Yeah.
This isn't global macro the way that you would hear it on ABC or CBC. It's the way it is, told to you by participants. Important difference. We move on from there to, now that you know this, how do you make some money from it? We have analysts who have been in natural resources and precious metals markets for 40 years. Youngsters who failed at crypto and failed at technology and failed as supermarket analysts who've parachuted in here because they just learned how to spell gold. Rather, people who've been in the business for a very long time. But we go beyond them. Every year, we bring in people who have built multi-billion-dollar natural resource companies from scratch. And they tell you how they did it. They tell you the lessons that they learned and how those lessons made them better investors and can make you better investors. They tell you specifically how to identify $20 million market cap companies. It could be $2 or $3 billion market cap companies. This is where the rubber meets the road. But again, they're speaking, my macro guys are speaking from the belly of the beast. They did it. They're not observers, they're players. At every other conference I know in the world, the qualification to be an exhibitor is to check the cash. They're considered advertisers. My conference, I consider them content, because my viewers have told me that. So every public company exhibitor at my conference has to be owned in portfolios, owned and managed by the conference sponsors. Sadly, that's no guarantee because I own it that the stock goes up, but it is a guarantee that I've vetted it.
Yeah. Yeah.
On that.
Hmm.
And here's the upset, right? In 4 days, we're going to give you more information than you can comprehend. More than you can comprehend. More dense, valuable information than you can comprehend. So we're going to record every part of the proceedings. Whether you attend live or via live stream, you'll have access to those recordings for a year. And in order to get your money's worth, you're going to have to do that. You're going to have to refresh your memory. But we go beyond that. Unlike any other conference on the planet, in the 6 months before the conference, I interview every exhibitor and every speaker so that you can prepare yourself before you get there. You can go to the Real Classroom channel or the Rural Investment Media channel on YouTube, and you can see, 50 interviews. So you arrive at the conference really well prepared. But despite those two advantages, if for any reason you've attended live and live stream and you don't think you got your money's worth, I'll give you your money back. There's absolute no questions asked money back guarantee. I've only had to refund about 0.1% of the tuitions I've charged in 30 years.
Wow.
There is an unconditional money back guarantee. This is the only educational product I know that's financially riskless.
I like it. I like it. Guys, by the way, I am affiliated. Vic, thank you very much for making me an affiliate. I appreciate it. So you'll find the link in the description below, where you can sign up to the live stream. Honestly, I think I will be there. I'll be there live. I'll join the live stream for it as well. So, it's when are the dates again? 7th to 11th July, is it?
July 7th through 11,
Yeah.
either in Boca Raton, Florida, or via live stream in the comfort and convenience of your own home. We had people from 33 countries last year.
Oh, okay. Wow. Yeah, yeah, I think yeah, I'll definitely be there. I'll be there live. Could you let us know about Basselbank? Because one question I have is when is it coming? When is it starting? Because I've joined the wait list. The part that sold me was the go on.
You should ask the FDIC that question. Again, I should back up. Battle Bank is really the outgrowth of a bank we built years ago called EverBank. We
Okay.
built a very successful bank. In 18 years, we sold it. Great trade, made a lot of money, all that kind of stuff. But the people we sold it to sort of abandoned our customers. So we decided to service our customers again. That bank, our first bank, took us 19 months of organization from preliminary application to approval. But times have changed. This bank has been 4 years and counting. So what we did is we went and bought a bank, a little bank. And so we don't have to get approval to start a bank, but we do have to get approval to change the business plan of the bank. And paradoxically, we need to get approval to add new capital to the bank.
What?
Yeah, we expect that to occur very, very, very shortly.
Okay.
And I hope we'll be able to say at the conference, we've been approved. We're live.
Okay. Is this something that those of go on? Go on.
I hope we're able to say to our people, we're live.
Okay.
Let's go. Let's get it on. So what's different about this bank? Well, first of all, we don't have branches. This here, that's your branch. If you aren't technologically adept that your computer or your phone can be the branch, you should probably bank with an old-fashioned bank. We want to be a smart people's bank. That means that our interest expense is about 1.5 less than the big banks. And that's important. That means that we can pay you a fair rate of interest. And here's where stuff starts to get really different. The big banks have 15 or 16 different deposit accounts, 6 or 7 of which don't pay you any interest.
Yeah.
We have one high yield money market account. We pay you interest on your checking. So if interest is of interest, think Battle Bank. We also have savings products in other currencies. Most American banks give you the US dollar, the US dollar, or the US dollar. You will be able to save in 20 currencies at Battle Bank. So if you're a young European business person and you do business in the euro and the US dollar, you can maintain savings accounts in both. And you could transfer money between the two at low rates. Concept. And our lending differs. For some reason, most of my competitors in the banking business, thank God, don't believe that gold, silver, platinum, or palladium are good collateral. I think they're great collateral. And so we will lend, we will establish credit facilities secured by gold, silver, platinum, palladium. Note, not stuff you have buried in the backyard, but collateral that I can get my grimy creditor hands on. I guess what I'm trying to say is we built the last bank, EverBank, for you. We built it for the aspiring, self-actualized human being. And we grew it from zero to $275,000 in 14 years, from zero to $28 billion in deposits. We're going back at the same market. Pretty simple. If you're unhappy with your current bank, I think that probably describes every single one of your listeners. You should think about Battle Bank. We would love to compete with your business. We started our last bank with a customer backlog of 0. We have 17,000 people, including the esteemed Kojo, on our wait list. And so we expect to be able to grow very fast because of that.
Brilliant. Rick, that is an hour of your time that will live forever in my memory. Thank you very much for sitting with me. Yeah, that is it. That is it for this one. I'm so thankful. I'm so thankful. Yeah, we followed each other on X last year, and we've just been communicating on there, and it's been a pleasure.
Let's continue to harass the bad folks on X. Perhaps if you think it's useful to your audience, or if your audience communicates that they like it, let's visit on Pareto's Law sometime. Let's talk about the impact of Pareto's Law in your life and your investment portfolio.
That would be great. That would be. I'll chat with Kali to get that set up.
I look forward to it. I look forward to hosting you in Boca or online.
Brilliant. Thank you very much, Rick. I'll see you later. See you.
Bye.
Well, there we have it, Kanekis. That is an hour podcast, an hour interview with the Rick Rule. I hope you enjoyed it. I'm still smiling. I'm going to be pinching myself for the rest of the night. Hey, listen, I hope you enjoyed it. If you did, please hit the like button, subscribe as well if you're new and you haven't already. Be sure to check out the Rules Symposium link. I am an affiliate, so by signing up, by registering for the symposium through the link, you help support the channel as well. I'll be there live. And also check out Battleback because it sounds like they're doing some pretty cool stuff there. All right, share this video out on social media with friends, family, people you believe will profit from this, whether you're in the UK, US, Canada, anywhere in the world. This, like Rick said, is an issue that transcends race, politics, political affiliations. This is a math problem. This is something that people should be aware about so they can plan for the future. I'll see you guys in the next video. Peace.